Now on Sky News Business, your property empire.
Hello and welcome to Your Property Empire. I'm Chris Gray. On tonight's show, how did the spring selling season perform and what does that mean for the summer property market? We're seeing the term Super Saturdays a lot more in the media these days. So who actually benefits from these mega auction days, buyers or sellers? And reports are in coming that the property boom is over. So did we actually have a boom? And if we did, is it all over? But first up, realestate.com.au released some data recently on Australia's next $1 million suburbs. So what states are seeing the most suburbs join the $1 million club? Well, joining us tonight is Nerida Conisbee, Chief Economist at realestate.com.au, and Charles Tarbey, Chairman and owner of Century 21 Australasia. So Nerida, who's in the $1 million list?
Well, it's quite different when you look across Australia. We've got Cabramatta and Auburn in Sydney. When we go to Melbourne, we've got the outer east primarily, so places like, well, Plenty and Notting Hill. And then Queensland, we've got a bit of a mix, but Paddington's in the mix.
So, Charles, when it comes to these $1 million suburbs, obviously everyone wants to be in the $1 million club, but once you're actually in there, I've heard a lot of people would say, well, I don't want to buy in that suburb because it's too expensive already. So are they better off jumping into the cheaper ones? Have they got a better chance of then increasing?
Yeah, of course. So, a lot of those suburbs, as you know, when they reach the scoreboard, it's time not to look at them too closely. And it's great to have that information, and Nerida gets, because you can then start to really pinpoint where you want to go. I was looking at some land for sale today in a part of Sydney which is north of the M7, and they're asking $600,000-700,000 just for a block of land, and then 8 kilometres south of that you can buy a 3-bedroom brick home for $650,000 in a suburb that most people might not want to live in.
So you can still work on that kind of the flow-on effect of going to the next best suburb.
Yeah, yes, I think so. Yeah.
Now, obviously, soon we're going to get to a stage where every suburb in Australia is average of million. So is the $1 million equivalent now maybe $2 or $3 million?
Yeah, look, I mean, still less than 3% of suburbs around Australia are at that price point, but we come to Sydney and there's 50% of them at the $1 million or greater price point. So Sydney now is seeing more $3 million suburbs. We've got, we've got places like Cabarita, Roseville start to enter that group. And $2 million suburbs, more and more of them in Melbourne as well. So I think, Melbourne still doesn't have many $3 million suburbs, but certainly for Sydney we're seeing far more.
Yes.
Charles, with different price points, there obviously comes with different volatility, and as real estate agents, you'd know exactly what that's going to be. So when we're investing, quite often we say go 80% of the median because it's nice and solid. So for a lot of these states, if you're getting into $1 or $2 million properties, could it be up or down 20 or 30% depending on what's going on in the economy?
Yeah, it can be, and it changes very quickly too. This is the thing that people have got to be mindful of. We're in that sort of volatile space right now where what you think a property is worth could change downwards incredibly quickly. There are still some areas with upside, but mostly we're looking at downside now than we are at upside in suburbs. So I'd be saying to people, be careful of where you're buying right now because there are changes afoot.
Because Nerida, buying, say, $1 million in Bondi Beach or something like that is obviously pretty safe money, whereas buying it in other places can be terrible because you're kind of best house to worst street. So how do things compare, say, between, say, Melbourne, $1 million versus, say, Hobart?
Well, there's no $1 million suburbs in Hobart, so it does give you an idea how affordable it is. You can buy a pretty nice home in somewhere like Sandy Bay, and it's quite different in Melbourne. Obviously, $1 million in Melbourne doesn't buy you much in the inner suburbs of Melbourne, but will buy you something quite nice in the outer suburbs. And then in Sydney, we're now moving into places that, traditionally have been very working class. Cabramatta, historically we haven't seen that.
It's extraordinary, isn't it, those suburbs?
Yeah.
You look at Auburn, Cabramatta, all those areas, Wentworthville, Parramatta, Harris Park, were not areas that people would traditionally look at buying in. And now the infrastructure has changed again. There's a new freeway opening that will connect the city closer to it on the M4, and they're looking at connecting the M7. There's a whole series of reasons why those areas are becoming incredibly strong. But a lot of people have a tendency to look elsewhere because of what they might think the areas are like. And, we've talked about this for ages, Chris, about buying in the suburbs that are in between the suburbs that people talk about all the time.
And when it comes to selling a property at that price range, do you have to be even more careful of picking the right agent? Because maybe at cheaper price ranges, everyone can sell that property for within a few % of the price?
Yeah, they can, and you're pretty well easily guided by that, because if you've got 10 properties for sale in the area, you're going to have an idea what the price is like. But when you get into some of these other locations, and I spoke to somebody recently who has a property in Wentworth Falls, and it's a historic home, and the agent said, oh, look, we won't auction it, we'll put it on for private treaty. And I said to the chap, look, I think you really should be putting it on with no price for a period of time, just to see what happens, because that's the sort of property you're talking about. You just never know.
Now, Nerida, when someone puts an advert on realestate.com for a particular property, you can see the buyer demand and see how many people are looking at it straight away. So how much does that buyer demand change, I guess, as the price goes up and up?
Yeah, I mean, it's interesting. Manly hit a $3 million median quite recently, and Manly is always one of the top suburbs on our site. But, you know, realistically, there's far few people who can afford a $3 million home. So, you know, we did see Manly's pushed down the list as a result, and then places like Allambie Heights, Narrowena are starting to push up because they have, you know, more of a $1.5 million median. So, you know, I think the price point is so important, and, you know, people are, you know, they're stretched and they can only afford so much, and you know, those really, really high prices do affect popularity.
It's interesting with the change of suburbs how different the price can be. I read an article today where Meriton, Mr Triggerboff, was talking about changing the postcode of a large development he's got, see if the council could extend the postcode, because that side of the line is far more expensive than this side of the line. It's very interesting.
And I guess most people couldn't do that, but someone like Triggerboff might be able to stretch it.
Good chance. I said to somebody the other day, I think he owns the ANZ Bank now. I'm not sure. It'd be pretty close.
Now, a lot of people might say that once you get to a certain dollar value, then people don't worry about interest rates. Like, is there a price band that people are suddenly so super rich that it really doesn't matter?
Yeah, and look, it doesn't impact. There's a lot of people that, Chris, you would know, that only have one property, and it could be a multi-million-dollar property, and they're accustomed to bonuses and all sorts of things. And if that changes, then, man, the interest rates have a real impact on those people. So right now, no. And
again, they're not necessarily rich, so they might be rich that they've got a big asset,
that
rich,
one
but
big asset.
Everything's resting on one job.
Absolutely, and people don't want to go backwards, you know, they don't want to sell their mansion and go backwards. It's difficult. It's difficult keeping up with the Joneses. They refinance and you've got to go again.
and that's the thing is in the GFC for Sydney, then the Mosmans and I guess the holiday homes in the Palm Beach, they're the ones that were affected because they may not be super rich, they've just got that one high income.
Yeah.
A lot of those homes also in those areas are actually holiday homes. So they're generally the first to go. And
we all know a holiday home's not an investment, is it, Charles?
No, we don't.
Now, Nerida, you mentioned Hobart. Do you, and obviously performing well, do you see the trickle-on effect going from there?
Look, I don't. I mean, I think Hobart's quite unique in that the economy has changed a lot, that it was a government town, it had agriculture, and it was a fairly traditional economy, and we've now got tourism, we've got Mona, you know, we've got developing arts, culture, restaurants, but really strong unis, because we've actually seen a jump in the universities attracting offshore students. That flows through to housing.
Yeah, and why not? Yeah.
So I think, you know, I mean, we're also seeing quite high rental demand in Hobart as well, so that suggests that the economy's changed.
And as some people don't realise, it is actually in Australia, isn't it?
Very much. Yeah, very good,
Yes,
Chris. Yes.
Well, I went there for the first time not too long ago.
Yeah,
Still got Vodafone service, so it's good. And again, do you find that, I guess, when people are investing interstate, it does make it a lot harder?
It does make it harder.
They don't know the local area?
They don't know the area, but also when you start promoting it a lot, Hobart, as we talked about, a lot of people have gone down there and invested there. So one of the dangers of that is that you get too many investment properties down there and not enough people occupying them. And I'm starting to watch the rent movement in Hobart, and it is changing negatively, and it's not favouring the landlords at all. So people need to keep a close eye on that particular area as well.
Well, that's probably a good... Sorry, Karen.
Also, I was going to say, it's also a very small market. I mean, you've only got 700,000 people in the whole of Tasmania, so it's only about the size of the Gold Coast. So, yeah, it's pretty small.
Well, it's probably a good segue into your charts. Let's start off with the auction clearance
results, and they're still pretty strong. When you look across the region, 67.8% was the average clearance rate across the country. This time last year was 73.6. I mean, there is a difference, but not a great deal. Sydney actually improved. It had 1,217 auctions, and it came in at 67.4%. Now, Melbourne, of course, well, we're in the Melbourne Cup week, so the auctions were down to 309. Last week they were 1,983. So it's a massive difference. But even with 309, they had a 77.1% clearance rates. So very, very strong in that area still. You know, there are some markets that are suffering, but overall it is getting tougher for the auctioneers, but the clearance rates are still very good.
Because for most of the country, then Melbourne Cup Day is really one day, but for Melbourne it's pretty much a week.
It's a whole week.
And so is that pretty much a write-off for Melbourne real estate?
Pretty much. I think maybe even next weekend too. I'm not sure whether people will pick up, but generally the races are on for a good period of time. Yeah.
OK, well, how's homes advertised for sale? I'm sure Nerida will be interested in that.
They've been increasing every single week. They've been increasing for weeks now, and I know some people are saying that stock levels are not climbing, but they are. 2.53% increase this week over last week, and last week was over 1.6. The week before was over 2. So I think it's in a good range right now, and I think if we keep that up, that's going to keep that balance of the marketplace coming through for us.
Wonderful. And then moving on to rent price movements.
Yes, now they were up 1.64% this week over last week, which is quite a significant jump. The areas that suffered the most, again, let's come back to Hobart, 2.11% negative over this time last week. The one that I'm very inspired by is Perth. It was up 0.49%.
And finally, the vacancy rates.
Yeah, it's very strong. Melbourne, 0.8%. I mean, it just doesn't get much better than that. The other marketplace that was good, of course, Sydney at 2.05%. And Perth jumped over 8 last week, but it came back again, so it's back down to 7.63%. So it's just in the middle at 3.5% thereabouts for those 3 capital cities. Very good clearance rate, vacancy rates. Stop saying that.
Nerida, the amount of information that realestate.com has got is just ridiculous, the amount of data, and I'm sure you've got whole teams of people analysing it. How quickly can you see changes in the market from literally those adverts and seeing where the demand is?
We tend to look at it monthly. I mean, we can see demand change most accurately on a month-to-month basis. I mean, if we look kind of on a week-to-week basis, it kind of jumps around a little bit. So we tend to look monthly on that.
Yeah. Now, Charles, again, you're doing a lot with kind of RP Data, Core Logic. In terms of their information, a lot of the people are talking about growth at the moment. A lot of people are saying Sydney and Melbourne are changed and it's coming down to more zero. But are you seeing that you've really got to delve into that, because there are plenty of markets that are doing well and then there's other ones that aren't doing so well?
Yeah, the Melbourne market's still doing the best, and that's been a prediction we've had for quite some time. The Sydney market has had a decline 2 months in a row, but, you know, you've got to look at where it has gotten to, way above where it should have gotten to. The area that's concerning me the most still is Brisbane apartments. They haven't had much capital gain over the last few years, whereas even their residential housing only had a 23% gain compared to Sydney's 75% gain. So it's really quite substantially different. So that marketplace, because we're coming into a market now where it looks like it's getting tighter, they may be impacted. The banks might be a bit tougher on people who are coming in off the plan.
Because again, a lot of people that are worried about the Brisbane property market, it's literally those brand new properties where there's literally thousands and thousands. And if something's happening to that market, then the complete opposite can be being to your average home in a nice kind of leafy suburb.
Yeah, it can. I think what's going to happen, I like the Brisbane market and I like the Perth market, only because they're in really strange places compared to the rest of the country. They've got a good economy in Queensland, and their prices are still relatively low compared to Sydney and Melbourne. And Perth, because it's now back to pre-boom prices. So anybody that got capital growth in the last 5 or 6 years has lost it all. Yeah. So they're interesting places to watch.
Wonderful. Well, thanks for joining us, Charles. We'll see you again next week.
Thank you.
Now, we're going to take a short break. We'll be back soon. You're watching Your Property Empire.